Welcome to our channel where we bring you the latest information and insights on crypto investments. In this video, we will be discussing 10 cryptocurrency investment strategies that can help you make informed decisions when investing in cryptocurrencies. As you already know, cryptocurrencies have become increasingly popular over the years, with more and more people looking to invest in this market. However, investing in cryptocurrencies can be quite risky, and if you don't know what you're doing, that's why it is important to have a solid investment strategy in place before investing any money. So without further ado, let's dive into the 10 cryptocurrency investment strategies that you should know in 2023. Strategy 1. Buy and hold. Buy and hold is a popular investment strategy in the world of cryptocurrencies, especially for long-term investors. The basic idea behind this strategy is to buy a cryptocurrency and hold onto it for a long time, with the expectation that its value will increase over time. One of the main advantages of this strategy is that it is relatively simple and requires very little active management. You don't need to constantly monitor the market or make frequent trades, which can be appealing to many investors who don't have a lot of time to devote to their investments. Another advantage of this strategy is that it can help you avoid the short-term volatility, and it's common in the cryptocurrency market. Cryptocurrencies are extremely volatile, with their price sometimes fluctuating wildly over short periods of time. By holding onto a cryptocurrency for a long time, you can potentially ride out these fluctuations and benefit from the long-term growth of the cryptocurrency. However, guys, there are risks to buy and hold strategies as well. Cryptocurrencies are still a relatively new asset class, and their long-term perspectives are uncertain. There is always the risk that the cryptocurrency that you invest in could lose value over time. Another potential risk of buy and hold strategies that can be difficult to know when to sell. If you hold onto a cryptocurrency for too long, you could miss out on potential gains. On the other hand, if you sell too early, you could miss out on even greater gains down the road. Overall, the buy and hold strategy can be a good option for long-term investors who believe in the long-term perspectives of the particular cryptocurrency. Strategy 2. Diversification. The diversification strategy involves investing in multiple cryptocurrencies to spread out the risk. By investing in multiple cryptocurrencies, you reduce the impact of any one cryptocurrency price fluctuation as your overall investment portfolio. Strategy 3. Swing trading. Swing trading involves buying and selling cryptocurrencies over a short period of time, usually a few days or weeks. This strategy requires a good understanding of market trends and price movements to make informed decisions. Strategy 4. Day trading. Day trading is a popular investment strategy in the world of cryptocurrencies, especially for investors who are looking to make quick profits from short-term price movements. The basic idea behind this strategy is to buy and sell cryptocurrency within the same day, with the goal of profiting from short-term price movements. One of the main advantages of day trading is that it can potentially generate quick profits, especially in a highly volatile market like cryptocurrencies. By buying low and selling high within a short time frame, day traders can potentially make significant profits in a short amount of time. Day trading can require a lot of attention and focus, so traders need to constantly monitor the market and make quick decisions. However, guys, there are also some risks to day trading, and one of the main risks is that it can be difficult to predict short-term price movements in a highly volatile market like cryptocurrencies. The price of cryptocurrency can fluctuate wildly over the course of a single day, and it can be difficult to know when to buy and when to sell. Day trading can be a good option for investors who are willing to take a higher level of risk in pursuit of potentially quick profit. Strategy number 5. Scalping. Scalping is a high-frequency trading strategy that involves making multiple trades within a short period of time to make small profits. This strategy requires a lot of experience and a deep understanding of market trends. Strategy 6. ICO investing. Now, ICO investing involves investing in initial coin offerings, which are a type of fundraising for new cryptocurrency projects. This strategy requires careful research and due diligence, as many ICOs turn out to be scams. Bringing us to number 7, value investing. Now, value investing involves investing in cryptocurrencies that are undervalued by the market. This strategy requires a good understanding of market trends and the fundamentals of the cryptocurrency being invested. At number 8, we have kept arbitrage. Now, arbitrage strategy involves buying a cryptocurrency on one exchange where the price is low and selling it on the another exchange where the price is high. This strategy requires a good understanding of market trends and a price movement, as well as the ability to quickly execute trades. And that is the reason we have included at number 9 my personal favorite, margin trading strategy. Margin trading involves borrowing funds from a cryptocurrency exchange to buy cryptocurrencies. This strategy can be very risky as it involves using leverage to amplify gains and losses, and that is the reason I always mention to everyone to make sure that they understand the market before they invest, and always make sure to do your own due diligence, guys, because it is very volatile and it can cause you to have a lot of losses as well. But if you understand the market, you're in for some gains. And at number 10, our last strategy, which is the most safest of all, staking. Staking is a popular investment strategy in the world of cryptocurrency, especially for investors who are interested in earning passive income from their holdings. The basic idea behind this strategy is to hold a certain cryptocurrency and participate in the network staking process, which helps to validate transactions on the blockchain. Now, staking is a process that involves holding a certain amount of cryptocurrency in a staking wallet and contributing to the network security of validating transaction. In exchange for participating in the staking process, stakers are rewarded with new coins as well as transaction fees. One of the main advantages of staking is that it can provide a relatively low risk way to earn passive income from your cryptocurrency holding. Stakers are generally rewarded with a fixed percentage of new coins each year, which can provide a steady stream of income over time. Another advantage of staking is that it can help you support the network and improve its security, and by participating in the staking process, stakers will be able to make a lot of money in exchange. It is important to do your research and make informed decisions. We hope that this video has provided you with some valuable insights into the different cryptocurrency investment strategies you can use to make profitable investments. If you have any questions whatsoever, you can always ask us in the comment section down below. If you haven't subscribed to our channel, guys, do subscribe to the channel and do not forget to press the bell icon. Share this video with your friends and family, and remember that I'm not a financial advisor and to do your own due diligence before investing, and never invest more than you're willing to lose. With that said, stay tuned for our next video. Until then, take care.